Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So it is Tuesday, and what a wild ride today. It felt like today was a week worth of trading. We came in, I don't even remember what the futures were doing. They were basically flat. You had Netflix up like 50 points. And then a funny thing happened on the way to the office. They actually shook the tree a little bit. They basically gave you a shot across the bow. And that was Netflix opening at 390 and literally didn't find the bid the entire way down all the way to the lows of the day. What that did in the first hours, it caused some fear in other high beta momentum names. Because if they were selling off a name like Netflix that was pretty much priced for perfection and they sold off a solid report, maybe they would take some of the air out of some of the other momentum names. So it was sell first, ask questions later. And then a lot of stocks regrouped. Some things went back on their normal trend and some things didn't. So as we said before, in this type of area, it's going to be very stock specific. And today should at least show you that you need some caution, that you can't just buy and get saved, that you need to do a level versus a level and have a plan. You also need high level stops to protect some gains. And you have to know your time frame, which is something we always say. So first, you look at the S&P, you'll see, it looks like a normal day at the office, right? Here was a move that started 10 days ago. Here was a fast and furious trend. And today, not a care in the world here. That's what it looks like, at least. You did get a quick move lower, and then it came back and closed fine. And the problem is here is, like, even if we did sell off, it would hurt a little bit because we're getting a little spoiled. But the bottom line is, look where the 8-day is. Look where the 21-day is. The strongest markets usually ride these, and these are extended from it. So it makes for a little precarious situation where there's some risk out there. And if you look at Netflix, you will see, the risk that can take place, right? Here's a strong stock that's been trending, and you gapped up here. Really didn't give you many signs at the start, and then all of a sudden just start to sell. Some guys look to get short when it broke back below the prior day high of 355, and then down another 28 points. So if you were trying to find, or buy a dip, that's how you get put out of business if you don't do a level versus a level. Some guys actually shorted versus the highs and had their best day of the year. So depending on where you were, just what this day does is this is a major wide range bar. So Netflix, not saying the game is over there, but you're not going to see momentum in this one for a while. So what do we know tomorrow? You'll see what happens, here, with today's low, and then you'll see what takes place. But it actually, if you put it in perspective, which is kind of crazy, is that it just shows you how extended it was, because all this did is take you back to the 21-day moving average, which it's been below a few times. But this is an ugly bar that definitely scared the you-know-what out of some people that were in the stock, especially if you chased it higher. So with that being said, you look at some other some other momentum names. If you look at Google, Google did not get affected. Right? Google is not considered a high valuation name. It's considered actually, a decent aligned valuation that has some growth. So to me, I think that this, with a day or so, could take out this 1019 for higher prices. If you look at CMG, which happened on the same day, this is the same kind of strategy that I'm looking for, where you had a big gap to the upside inside day. People who are looking for continuation, they got it here. Okay, this definitely didn't get affected by Netflix and was in its own little world today. So Google, which isn't as shorted and might take a little bit more time, that's something to look at in the next session or so, as long as you could actually put a stop here at 995. So with that said, keep that on your radar. As far as Apple, I would say that Apple was a little bit, what's the word? You could say there's reasons to be positive on the action today and reasons to be negative. First of all, it just went from 488 to 529. Okay, when they were done with the event, there was nothing special. Okay, granted, the iPad's pretty cool. A lot of people are going to buy it, thinner and faster, and the whole spiel. There was no TV and there was no watch, and so at first they tried to sell it off. And typically, the Apple of old, they've been able to sell it down, right? Sell it down, close down 8-9 points, and you would have thought that could have happened today, right? After the size of the move that it had, and it actually took it somewhat in stride. So what I'd like to do is I'd like to see Apple hang in there the next few sessions, absorb the move we just saw in the last 2 weeks, and then we'll figure out an earnings strategy. If you look at the chart here with Apple, you will see this was the last calculated spot that we liked it around 488 to 493. There was your move. Today I came in long Apple, sold some before that even took place, and now if you look at this day, doesn't look so bad. Granted, it definitely shook some people up, but now at least the event is behind us. And now we have a new point of reference. You have 528. It held support going back sideways. Some people got involved near the lows. I actually don't have any Apple. I'll wait a session or so and then see if we can get back up there. It still, has an unopened gap to 540, and who knows, it could even see higher prices. This is something I've been staying with. I think this is one of the first few nights in a while I don't have it long. But I would say, based on the action of some past events, this isn't so bad as far as the action here. So with that said, an inside day or so would be nice. As far as some other stocks, it looked like, social networking got hit a little bit. I came in short Facebook, got stopped out of it. Those on the virtual trade floor saw that. Then the old Scott would have been like, oh, I'm done with that thing. Instead, the new Scott said, you know what? Now it's showing relative weakness. Let me try and get shorted. And if you look at Facebook, it did break this support area, that upper area, went into the gap. Here's the 8-day. I don't think we'll get that much more. We shall see. But ultimately, this was a little relatively weaker. So if you're looking for something to try and be short for a cute trade, perhaps this one is it. And I'm short a little bit overnight, but I'm still very bullish on Facebook. I just, I get to trade extra cute. Talking about cute trades, look at Solar City. Solar City wound up being a really nice day and a half short, if you executed well. I didn't execute as well as I could have, but ultimately, here was your outside day reversal. It opened up a little bit, traded through 57, gave you a push lower, and then that short action area, hopefully you covered into the moving average, because I think I tweeted somewhere around here saying I'm done with it. That was my day and a half trade. I just didn't flip long. You look at the 5-minute chart, you could see it a little bit more clear. Okay, here was here was the up open, and then you did get a nice move through this 57, gave an air pocket down about $3-4 before before it had a reversal pattern right here where you could have covered. And then even here, when it broke above this, and then lastly into the close, look at that move as a reclaimed 57 going sideways. So for me, I didn't execute as well as I could have, but some made money on the short side and then some repositioned long. And now they're going to wait to see what happens here moving forward. It looks okay. Tesla wasn't as successful. It seems like it's trying to hold and it's creating a different type of pattern. We haven't seen a sideways trend in this in a while. Here's the uptrend that was pretty fast and furious. And then remember, we came into the week right here, lagged last week, broke below 181, gave you the move to the downside, and now it's trying to hold in there. Okay, if you put the 50-day in, which I don't know why it's not there, we'll see it did hold that by a thread once again. It held it here and now held it here. I just think this needs more time. I would say take it light or reduce your time frames. There's some two-way action right now. It's trying to go sideways to absorb what's been an enormous year for it. And composure does change from time to time. So as far as some things that also happened today, worth noting, after the jobs report, which was light, you did see some money rotate into some other sectors, and I talked about it a day or two ago. Got stopped out of my home builders yesterday, went back to them today, and this was a leading sector for the majority of 2013, and now it seems like it tried to break above this little area, which if you could see over here, okay, and now looks like maybe after consolidating for most of the third quarter, it could be somewhere that provides some alpha, especially if rates remain low. That could be a catalyst for the home builders. Same thing, I guess, with the utilities. Utilities were fast and furious to start the year. Then you had this topping pattern, okay, and then it's been correcting ever since, and now it looks like it's trying to break this downtrend. So money is flowing here. Some people went long today. I skipped this one, but some people could be looking for yield, and this acted better than some other things, so perhaps it plays some catch-up. The banks are still hanging around, but not much follow through, hanging on the line there. I'm still long Bank of America, but I guess it looks fine, right? Holding in here, just not ready to go. Every day they use J.P. Morgan as a piggy bank for the Washington. So maybe when that changes, it can go again. But I still think it's okay. Coors, some retail looking good. Coors at highs here, closed at highs. Hopefully it gets a little bit of follow through tomorrow. Looking pretty good. The stock's been an unbelievable IPO, for the past year or so. Look at that trend. Wow. They say you can't be a stock picker in the market. Look at Coors. Looks really good. TJ Maxx, which has also been around for a while, it too had a really nice session. Brittany has loved this stock, and she's given her opinion on it from time to time. And there you go. Nice trending stock, looking good. And then gold today might have changed a little bit. Okay, I think gold is trying to break into something that's meaningful. We talked about this gap up that held today. It triggered above this buy area, which we talked about, which was about 127.86, and now it's still in front of a major downtrend. So in order for this to really get the bugs dancing a little bit, it really has to trade above, I would say, this pivot to be more than just a trade. If you caught a good trade in gold, long, congratulations. But if you think you could stay with it and getting a new bull market born in gold, I would not be jumping to conclusions yet, but it is acting a bit better. And some are still pointing to this inverted head and shoulders here with the left shoulder, the head, this being the right shoulder, and this being a massive neckline. Could be the case. So if you're in it, trail it. Unfortunately, a lot of moves happen overnight. It's a little bit random, but it's pleading its case right now where it's a little bit more neutral to positive versus neutral to negative, and then this would be something for the bugs to watch. And all in all, I would say that today what some would say is like a shot across the bow. It shows you that risk can happen, and when it happens fast. That hour felt a little bit like, or that 15 minutes felt a little bit like a flash crash. I actually had the luxury of, sometimes you get lucky. I sold my Apple early, so I didn't get caught in that. And I was looking to short Facebook and short Solar City. So for me, that move to the downside actually was beneficial. But it showed you that you just can't fall asleep behind the wheel. If you're trailing things, make sure you have high-level stops, and know that if you're trying to buy a dip in something, something like Netflix could take place where you have to have a level versus a level, because if you bought that the whole way down, chances are if you have a trading account, it might have blew up. That's what you call a widowmaker right there. With that being said, but also it could be, if you were shorted, some guy shorted that open and said, I'm done with this thing. You kidding me? It's up 400% for the year. They're selling the news. I'm short versus opening print. But that's what makes a market. So with all that said, I'd continue to take trades. Maybe put on a little less size. Don't have as many positions as you might have had. Make sure that you know your levels and know your commitment and know your time frame. And all these things adding up could continue to have you stay the course. If you want to watch tonight's CNBC World Markets, I'm hosting from 6 to 6:40. Not Mad Money. That's the CNBC World Markets where, they're open tomorrow, today, or something like that. With that said, have a great night. I'll see you tomorrow. Hopefully you did okay today.